Well, fingers crossed as to whether or not we'll fix the power problems in Nigeria. And while we wait for that, to discuss the latest news moving Nigeria's fixed income and money market, Steve Osho, a trader at Stanbic IBTC Global Markets, joins us for some perspective. Steve, thank you very much for joining us. I think the big story over the last few weeks has been the strength of the Naira. I want you to just take us through your thoughts about the key drivers for that. I think a key driver that I have picked up clearly is the fact that there seems to be a little more appetite from the foreign investors for Nigeria's fixed income instruments.
Morning, Wole. Thanks for having me. I think you're correct. There's been a lot of renewed interest coming through Nigerian fixed income markets from both offshore players and local players. But in relationship with what's happening in the markets in terms of FX appreciation or Naira appreciation, we've seen quite a lot of inflow coming through the offshores who are participating in the one-year paper, which was auctioned last week. And at the same time, we've seen a lot of flows coming from the oil majors. We saw some kind of chunky sales coming from NNPC, Chevrons, and the likes. And for the same regular supply coming through from the WDAS, that's the official window from CBN.
Right.
We've seen quite a number of supply going through that window, and that's the reason why we've seen the Naira stretching over the period.
Well, you made a point about the foreign investors being a little more interested in the one-year paper, but if you look at the 10-year yield and looking at where inflation is right now, there's a pretty decent spread between inflation at 8.5 and, of course, the 10-year at about 11.5. So, like a 2 percentage point spread there. Isn't that something that should attract foreign investors? Are we seeing a little more interest in the longer end of the curve?
We're seeing quite a lot of interest across all the maturities, though. But I actually could explain the reason why we've been seeing so much demand coming through on the 10-year papers is on the back of the fact that it's one of those bonds actually what included in the JPI index. So we see quite a lot of interest coming from the offshore players who are interested in that particular paper and who are interested in that particular end of the curve. And at the same time, if you look at the if you look at the spread between the inflation and where those bonds are trading right now across those maturity, I think the highest we're seeing right now is around 11.7. I think there's still positive returns on all those investment. But again, if you now look at the risks, the value to risk in terms of what you're holding in your book, right, and projections in terms of outlook for the economy, then you can see the reason why we've seen quite a lot of demands coming through the one-year paper, trading at 13% yield in this primary auction, and as high as 12.7, 12.65 in the secondary market. In terms of yield.
Of course, very attractive yield on the short end of the curve there. But of course, tomorrow we have the bond auction for this month. By 110 billion naira worth of bonds will be auctioned. Your thoughts about that? Because I know that at the last auction we did see yields move higher relative to the previous auction.
I think if you look at the amounts on offer for this particular month, it's actually a bit chunky. We have about 110 billion. But if you look at the spectrums, at least across all the maturities where they are being offered, we have 4 different maturities that will be on offer. We have the 2015, we have the 2017, we have the 2019, and we have the 2030 that will be on offer, and which is coming in different sizes. I think if the global appetite risk is still on, and interest is still on from both offshore players and local players, the possibility is there for us to see them hover around this particular level in the secondary market. But if there's a slowdown, which has actually been the reason why we're seeing some kind of uplift in terms of yield over a period from offshore guys, then you actually might see some of those yield touching like 12%.
All right. What impact do you think the April inflation numbers may have on yields? Because it's widely expected to tick higher from the 8.5% we saw in March.
Well, I don't think we're going to see any much difference from what we're seeing in secondary market right now. And in terms of impact in what the yield will be trading in the secondary market, if you look at it, when even inflation went down to 8.6 at the present level, we actually did not see much movement in tandem with that. And in as much as it even moves higher to 9.6 or 9.4 as projected by the specialists, I don't think it's going to be any major concern or it's going to impact majorly on the secondary market. Because if you look at it, compared to what yields are trading right now, both on bills and bond, return is still positive.